This is John Kvale. This is your August capital market and financial planning review, and this is about the 10th take, so I hope we get it right. I'm going to move myself off into the corner. Those of you, again, hopefully, there we go, up in the corner. Those of you that follow our writings very diligently may have noticed we had some new formatting. They call it block editing, and it's really snazzy stuff, but it's given me some trouble. So it's been a tough work in progress, if I could speak this week, but we're getting there. So as I always like to say, we do this in a video podcast format. If you're driving down the road, please don't take your hands off the wheel. Let's stay safe. All right, let's get to it. Newbies. Now, here I am having issues with this. All right, come on now. Trying to move the cursor. All right, here we go. Finally. This was the 10th take, and I'm finally getting it to go here. This new block editor is causing a little bit of problems. Moving right along, the mysterious form 5498 I mentioned in here. In those of you that are driving or listening only, I've got a hot link to the post. Oddly enough, I did this when this post came out, and form 5498 showed up in my mailbox that same day. Lucky timing. And as a quick reminder, 5498 basically is a settle-up form that comes after our regular filing that lets the IRS know that you made a contribution or rolled over, 401k, IRA, or the like, and shows that it's not taxable. All right. And just moving down just a little bit, another reminder that I wanted to let everybody know, and that is fraudsters. The fraudsters are out. In this post, those of you that are listening, I've got a link. We remind people, especially when they're linking, when I call linking, it is setting up the ability to wire back and forth or ACH back and forth to financial accounts. If you're linking, or if let's say you're closing on a house and that's going to be a non-like titled account, put your patience hat on and expect trouble. It could be a child's account. If it's in a different name, we're going to have to go through. It's almost sometimes impossible for us to do. And if you're doing it with a bank or other entity, expect lots and lots of time to get that done, just because the fraudsters are really out there. All right, you guys know we call it as we see it. And I'm going to do several posts about this. Those of you that are listening, I am in capital market, down to the capital market. We did look through. We stood out on an island in March. We've looked through the valley, and now we're too optimistic. We've gone too far. The capital markets have gone too far. I'm not going to bog us down because this is getting a little bit long, but now is not the time to take additional risk in portfolios. Actually, it's to make sure that all of our portfolios, which we are doing, would make sure that our portfolios are staying in check. I'm going to give some more updates about this either next week or the following week, but I have to officially say we've gone too far now and we're well ahead of ourselves. That doesn't mean that we're going to come back. There's a lot of similarities to 1999 in this, and that's, I don't want to frighten people, but now is just a time to be a little more conservative. We said in March, when all heck was breaking loose, that we would look through, and we were correct on that. And we've been very positive, and we're very positive on this, but we see it as we call it as we see it. That is, that markets have gotten ahead of themselves. All right, that's it. Since I'm going to talk about that a little bit more in a few other subject matters, I'm going to leave that at the end. We will talk to you at the end of September. So thanks for your time. Have a great day, and we'll talk to you soon. Bye-bye.